All right, gang, how you doing? Hope you enjoyed your weekend. We made it through that short week. Little crazy at the end of the day on Friday. I believe that sell-off was more just fear for 9/11 repercussions. But Monday should be good. I feel like we're gonna bounce. And yeah, so let's see. I got 5 items here for you guys. And the first one that I'm looking at is going to be Activision. Now, Activision did spike on Friday with the news with Apple. However, I still feel like this is still pretty good downside play here, and I do want to go ahead and um, play it pretty much short. Okay, but not so short, right? Um, that it's too many short deltas, just more along the lines of a strangle to give a little bit of short delta, but a little bit of wiggle room as well in case it does continue to push back up. So as you can see, Activision, after making those highs, we pulled back. It consolidated for actually a long time. And then I believe this was some lawsuit information, but then it started dipping down. Now, this is Friday, light squeeze. You see that momentum up here, well, with that news. Now, I still want to play it short. I'm going to go super wide. As you can see, my short strike is very close to the 200 day, all above the 8, 21, and 50 moving averages, along with resistance as well, right? And then, playing it short, giving a lot of wiggle room to the downside here to give us that short delta. So with Activision, we're still in October, but we're only in October this week. Then we're jumping into either weeklies or November already. I can't believe it. So I'm looking at selling those 65 puts, right, at a 6 delta. And then I want to go ahead and sell the 90 calls at a 12 delta. That's going to give an 87 pop. I would like to get at least 70 cents for it. You can see it's going to give about 14 deltas short. Okay. $140 because you're going to want to do at least 2 contracts. And for that, buying power is a little bit higher, but I like this pop, so I'm okay with it. And you're roughly $1,600 in buying power. Okay. And as you can see, well past the expected move here. Can you define it? I mean, define anything, right? Whether it's worth it is a whole nother story. You can see 2 contracts on a 5 wide will give you over $100, but you're putting up a lot more at risk. So you're not getting 1/3 the width. Now, if you do it kind of more along a 2.5 wide, if you could get 50 cents for it, it might be worth it where you're only putting up $400, and I'm a little bit okay with that for the lower credit, and it's still past expected move, but it leans you more delta neutral in this case. So ideally, I would just like to go ahead and sell it naked, but you can get away with it. You could even do something if you wanted the short deltas along the lines of, and again, it's not the greatest, but it's still better than nothing here. You could play it to the downside with an 85, 87.5 call spread. It's going to give you really good odds at 75%. 35, 40 cents, even if you got 35 cents with 3 contracts, $105, only $640 loss. That's okay. It's not the greatest, but you still get good downside, roughly almost the same, right? And a good pop overall. So that would be like your defined version or a very tight iron condor, which again, I don't like iron condors. But those are your ways to go ahead and define it if you don't want to do this short skewed strangle, okay? Now, the next one that I'm looking at is going to be Home Depot. I like Home Depot long here. As you can see on this weekly chart, let's zoom in a little bit more here. All right, we got upward momentum really coming in. It bounced off that 21 last week and took off. We do have a nice little squeeze coming in here. Oh, excuse me. And then the daily, we got a good squeeze there. Upward momentum has been coming on here for about a week or so. Okay, we pulled back with Friday. That's just to be expected, but in my opinion, it's a better entry. And we are stacked to the upside, so I like it long. All right, we got some run room up to almost 340 here before hitting those highs. Now with Home Depot, it's going to be more of a debit spread because that IV is only 15%, and you're looking at 23 in the October cycle. So A at the money debit spread, pretty much a 50 pop, right? Try to get about 260, and that's a little high. You know, ideally you want 1-to-1, so 250. But 260 for a debit, so you're gonna pay 250 or 260, and I'm just looking for that run up, right? And then you're gonna want to sell it about on debit spreads. I like 25 to 35% credit profit, unlike credit spreads where I go for that 50. Okay, so this is a nice little at the money play, looking for that breakout to 340 and try to snag about 25-30% on it. All right. So then the next one that I'm looking at is an iron condor. I know I just said I don't like them, right? But the you'll see on this one, it's actually not too bad if you can get the fill. So that's LRCX, right? And as you can see here, we've been sideways. I mean, ultimately, we've been sideways since February. Had a little bit of a pop here, but after making those highs, we really just continued to go sideways, pulled back a little bit, bounced off the 200-day. Upward momentum already slowing down. So I just want to go ahead and, while it's only about 30 days, try to snag 40 to 50% on this. And as you can see, again, we are below the 200-day, below support, multiple levels here, and resistance. We are just shy of the all-time high, but you can actually see the 660 is some resistance there. So with this one, now it's volume is liquid enough. Your options, not so much. Spreads aren't all that bad for a $600 or $500 stock, but they are a little illiquid. So I wouldn't chase it. I would maybe put it in, maybe undercut it at a comfortable spot. You know, for me, I'd probably start here at about $1.40 and see if it fills. So what I'm looking at, again, we're in October. Want to go ahead and sell the 540 put, buy the 535, be about $10 past expected move, and then sell the 660 call and buy those 665s, be about $15 past expected move. Try to get $1.40. I'd even take $1.30. Now that's a 65 pop, which is overall really good for an iron condor. And as you can see, again, it's past expected move. Should be overall nice little play here. Okay. And next here is going to be Marriott, right? MAR. This one I don't want to do for a strangle. However, I actually don't think you could do it as a defined risk unless you want super low credit. So Marriott made these all-time highs and just steadily declined while consolidating, right? Decline, consolidation, decline, consolidation. You get the point, right? All the way down. So it kind of pushed up a little bit, but we're hitting that 50-day and that 200-day. So a little bit of resistance there. We got support down at 127, and then I'm giving it a lot of wiggle room here. Also, while giving it a lot of run room up to just below those all-time highs. Okay. So with this one, I want to sell the 115 puts and sell the 155 calls. Okay, it's going to lean it a hair short, not even one delta short. So pretty much delta neutral here. Pretty much an 80% pop. I would like to get like $1.15 for this strangle. You can see we're past expected move. So, and then, you know, it's a little expensive, $100, I wish, $1,300 in buying power. So a little bit higher, but I do like that we are past expected move overall, and it's just been trending sideways, gosh, since March. So it looks good. Defined risk, like I said, you would have to get super close to do it, and I don't think I'd want to do that. 115, yeah, it's a little low. Okay, so I would stick with the strangle, and if you just can't do it, avoid the trade. All right. And then now the next one here is also another strangle, and that is match MTCH. Again, match has been consolidating since December. It started to pick up here a little bit. However, it pulled back again because of Friday. So what I want to do on this one is lean it neutral. Okay, not quite the low where I want, but that's way down there if you look at the delta. So I'm gonna avoid that. Not a lot of credit down that far. So don't mind it here. Selling the 140s and the 200s. Okay. So on this one, right, I want to sell the 140 puts, which is an 11 delta, and the 200 calls, which is a 10 delta. It'll lean you just a very little teeny tiny bit long, which is actually kind of good if it continues this run up. 83 pop. Okay, $225 in credit. I'd probably undercut it. and only 1,600 bucks. So the credit to buying power ratio here is fantastic, which is why I like this play. Okay. Defined risk, right? Like, let's take a look here. It's not the greatest. I wouldn't go any higher than that. The 85s would push it, and you just don't get that dollar. So this is another one that if you unfortunately do not like defined risk plays, I would avoid it. Okay. But overall, really good odds, great credit. Yeah, so that's it, gang. That's what I got for you. And I hope you enjoyed the rest of your weekend. We're back to normal work week. And yeah, so maybe I'll see you in chat one day. Take care, everybody.